There's a lot of negativity surrounding Tesla and Elon Musk in the last couple of months.
Antonio Garcia, Stephen Jurvetson, and Linda Johnson Rice will not stand for re-election over the next 2 years. It was announced late last week, and you can see the shares down by about 2%, down a decline of about $6, $267.33.
And the mixed view on that is there are certain people on that board who didn't want to be on that board.
Right, and maybe certain people who potentially shouldn't be.
Some of these people who are resigning are perceived as having close ties.
Close ties.
So maybe it is
It'd be a different story if you were getting rid of all the independent directors.
Exactly.
This may be a slightly.
But think about the news dump that Tesla has done Thursday. It announced that it wanted an extension in terms of reaching agreement with the SEC. Friday, it announces that it's reducing the board. Today, it's having its autonomy event.
Right. And then it has its earnings.
Right, exactly. Yeah. And then Wednesday's earnings. It's a very big week for Tesla.
A guest host this morning who owns one of these cars who's worried about it. And there are people who look at a video like that. Do you think it's real?
Well, does that mean that they're going to promise
are going crazy on Twitter right now, and then there's other people saying that this whole thing is some kind of hoax.
Right. I'm not surprised. I see that all the time. Andrew, I see this anytime there is a Tesla vehicle fire. And are they overcovered relative to gas fires? You bet. They are way overcovered relative to internal combustion vehicles that catch on fire. Having said that, it is new technology, and also it is technology that people look at and they say, are we 100% certain about this?
If it's been 14 fires over the last, let's say, 7.5 years,
right?
What do we know about the previous 14? I mean, I guess that's what I wonder, because we can look at these pictures and we can decide anything, but what's the backstory?
Becky, a lot of them are sparked after there has been an accident. Mm-hmm. And some of these accidents, you've had a Tesla colliding with either another vehicle or a wall at close to 100 miles per hour. And when I've talked with people who are experts in battery technology, everybody says the same thing. You have a vehicle slam into a wall at 100 miles per hour, you're going to get an explosion.
I think in general, Wall Street and analysts are expecting weak numbers going into Tesla's earnings tomorrow. But while Wall Street is focusing on the short-term numbers, Model S deliveries, the elephant in the room is really that we are dealing with a disruptive company.
I feel very confident predicting autonomous robotaxis for Tesla next year. Not in all jurisdictions, because we won't have regulatory approval everywhere, but I'm confident we'll have at least regulatory approval somewhere literally next year. So we did it. We're going to do the robotaxi thing too. Only criticism, and it's a fair one, and sometimes I'm not on time. But I get it done. The fundamental message that consumers should be taking today is that it's financially insane to buy anything other than a Tesla. It'll be like owning a horse in 3 years. I mean, fine if you want to own a horse, but you should go into it with that expectation.
Take a look at what Ron Baron has to say about Tesla longer term.
This is a big holding for you. I think it represents about 1.67% of your assets under management, which, by the way, are $28.25 billion, up from when you started with just $10 million back in 1982. But let's focus on Tesla for just a moment, because you've been a long-term bull on this stock, a long-term believer. You just met with the chair, but there have been so many questions that have been circulating. I'm going to let you make your case, and then maybe I'll push back on some of this stuff.
Well, for $28 billion of assets and $26 and a quarter billion.
We're talking about overall assets, not your assets.
And profits.
And profits.
So we made our clients more than $26 billion in profits, and we now have $28 billion. And in 1992, we had $150 million. Right. So we made a lot of money, and made it by being a long-term investor and often investing in businesses, as I mentioned before, which after we buy them for some period of time, nothing happens to the stock. In fact, one of the stocks that's in the news that we own right now is Iridium. And Iridium was in the news this morning and yesterday because they have Ariane. And Ariane is the satellite service that provided the FAA with information that allowed them to figure out what seems to be wrong with a plane, and they stopped it. But we invested in the final round of capital raise for Iridium 4 years ago. And after we invested, that was the last money they needed. We bought 10% of the company. Stock was trading at 7.25. I'll get to Tesla in a moment, but it's the idea that we have here. It's trading at 7.25. One of my friends is on the board. He told me that he had a significant personal investment in the company. Told me he thought that I would be interested in looking at it. Knew something about satellites. Said, who do we talk to? He put us in touch with the chairman. Spoke to him on a Thursday afternoon. Came up to visit us all day Friday. Spoke to him over the weekend. Spoke to him more on Monday morning. We did the rest of our diligence. And then we said, okay, we'll buy 10% of your company at 6.75, but if you sell to anyone else at a lower price in the next year, I want the lower price. We ultimately got 6.25 for it. And I said that by us investing in this company, then what's going to happen is that it's going to make this preferred issue a very strong issue. I want 10% of that too. He said, that's fine. It was a very strong issue. We got the preferred, 10% of preferred, then we got the common, bought 10% of the company. For 3 years, after we bought it, while they were making and launching satellites, stock was unchanged. So how many people can make investments where nothing happens in a stock for 3 years after they bought it? And SpaceX, by the way, was launching the satellites. We're an investor in SpaceX too, so I knew something about that. Now, in the past year, now that all the satellites are flying around, and the whole constellation, Department of Defense, IoT, Ariane, and so now all of a sudden they're going to generate revenues. The company's valued for $3 billion today. It's up 4 times from where we bought it. Didn't change for 3 years. Now it's up 4 times, and now it's $3 billion value. They're going to generate over $2 billion of cash flow over the next 4 or 5 years. And I think it's going to be twice the price.
And we're looking at the chart right there now too. But Tesla has to also be trying a patient investor's kind of patience at this point.
So Tesla, we began to invest in 2014.
But your cost is what, $219 for shares of Tesla?
Yes.
So we're trading at $290 now.
Yeah. So my clients cost, I haven't bought stock for myself for 17 years. This is the first stock that I told the board I would like to make an investment on behalf of our firm, Baron Capital, in this company. Bought 225,000 shares at 235 after we bought, we have 165,000, including the 225,000 that I own for Baron Capital. And I did it for Baron Capital because I said, gee, I can afford to lose the investment that I have in Baron, in this company, but I can't afford not to make $1 billion. And which is what I think is going to happen over the next 10 or 12 years.
So 1.6 million shares that you have includes the 225 for Baron, your personal investment.
1,000,004 for clients and 225 for Baron Capital. Okay. But my investments are principally in the mutual funds, and they have been for 17 years. And I'm a big investor in the mutual funds every single year, significant amounts of money.
The concerns about Tesla right now. Let's run through a few things. Let's start first of all with the SECs.
But wait, let me stop one more thing before we start. So Tesla, when we started to invest, did $3.7 billion a year of revenues. This past year, they did $21 billion. The year coming up, they do $30 billion. I think in 5 years, they'll do $150 billion. So this is not a small company anymore. $30 billion in revenues from $3.7 billion. So the company is up 7 times in revenues in the last 5 years, and the stock is up 30, 40, 50%.
Okay, let's actually, instead of starting with the SEC, let's start backwards from that, just because you bring up the idea of how they're going to grow from here. The bear case out there takes a look at the balance sheet, for starters, let's just say, because of the run rate that they're going to be anticipating, because the company has said it's not going to be profitable in the first quarter. There has been an analysis I've seen that says they're going to, after they paid off the debt that they had, that was almost $1 billion, they see a run rate of about $1 billion in that first quarter. Will that get them down to a balance sheet that has about $2 billion on it? And is that enough, or will they need to go back for more capital?
Well, I think people are guessing. They don't know what the cost of goods is for the company. They don't understand what the cash flow is that's being produced from the cars that are being made. When they're making them all domestically, the cash flow is better than it is internationally, because they have to pay in 60 days, and they make the cars from the time they get the order. in something like 14 or 15 or 18 days. So basically, they can make cars a lot faster than they have to pay.
So the cash burn, those analyses are not correct. That's not what you think.
No, there's $1 billion of extra cash flow that they produce every time they make $1 billion of annual sales. So.
Yeah, we had an analyst on the show yesterday who was talking about the cost of the battery, Joe. I don't know if you, the conversation.
We talked about it.
Yeah, I watched that. I was working out in the morning. I watched your.
You heard when
and you said you were going to clip it,
Yeah.
and you were going to show it again.
Yeah, I don't know if we did that, but you saw it anyway, so we don't
He
have
basically made the argument that there isn't a competitive moat around the cost of the battery, which is to say that the cost of the Porsche battery and the cost of the Tesla battery, he was arguing, are effectively the same. He was saying that the cost of the Porsche battery was $230
to 250 is what he
$230
said.
to $250, and the Tesla, at least the whisper number, was closer to $150, and he said that he didn't believe that number.
Yeah. So Elon Musk has said, given guidance, that his cost for a kilowatt hour is 100, or approaching 100, and I guess 10 years ago it was 300. So $300 then, it's now approaching 100, and it's going to be significantly less than that within the next 2 or 3 years. And you have to remember that Tesla makes half the batteries in the whole world. And when you think about competitive advantage, they're a business that's growing 50% a year, making half the batteries in the world, and shrinking the size of the battery, shrinking the weight of the battery, shrinking the components in the battery, shrinking the expensive things that are in the battery. Cobalt was 20 or 30% of a battery. It's now 2 or 3%. That's what's really expensive. So they have driven down the cost. They're making the battery more efficient. I brought a little chart, which I guess you're not going to be able to see. I could pass it around.
Yeah, pass it out. Maybe I'll be able to hold it up for Kyle.
So what you can see is that not only is their cost lower than everyone else's, but also the amount of miles that they drive in a car is more for them than it is for anyone else. It's 4.1 miles per kilowatt hour for them, and it's 2.5 kilowatt hours for everyone else for a mile. So basically, they're getting more miles per kilowatt hour than anyone else, even though their cost is also lower, and even though the weight is lower, and even though and it keeps getting lower and lower and lower.